In this video, we will look at an example of travel allowance and how we apply the principles that we have learned to a scenario. If we look at the details of our example, it reads as follows. Penny owns a convertible sports car, which she uses for both private and business purposes. She traveled 21,000 kilometers in the convertible during the current year of assessment. Penny kept a detailed logbook of all her traveling. She traveled 6,000 kilometers for business purposes and also kept record of all her running costs of the convertible sports car. The running costs exclude wear and tear and finance charges for the year, which amounted to 17,024. Finance charges for the year amounted to 12,413. The convertible sports car cost Penny 359,584 inclusive of VAT when she purchased the car in the previous tax year. Penny received a travel allowance of 82,000 for the year. So what we need to look at is how much will be included in Penny's taxable income. I think that is what is making the requirement. So you need to determine how much of the travel allowance that was received will be included in Penny's taxable income. Right, so you need to stop and think, right? How does this calculation that I'm doing affect our taxable income calculation? So if we look at the calculation of taxable income, you'll have there an amount of travel allowance received, 82,000, and this part would be how you, or where this whole calculation comes through, right? To get to that 82, to the amount that we need to include in taxable income, right? Please take note of the following. The amount, whatever amount that we are going to determine over here, is the amount, or it's the amount that should be included in taxable income. The net amount is what should be included in taxable income. So what that would mean is you will, or you might be penalized if you include the total amount that is received in taxable income, and then, or in that taxable income column, if you include the total amount of the allowance received and then less costs of business travel in that taxable income column. So you are not allowed to do this. What you are allowed to do is, in your calculation of taxable income, you will have the travel allowance, the net amount, and that is what you will include, which is this amount over here. This is what you will include in taxable income, and not the 80, and not you showing the 80 less the cost of business travel. You are not allowed to do that. You only include the net amount. Right. Now, since the taxpayer has kept record of all their expenses, they have two options available in terms of determining the amount that should be, or the net amount that should be included in taxable income. So they can either make use of the actual costs that have been incurred. So that's the first option. The second option is they can make use of the deemed cost scale to see how much can be deducted from the travel allowance that they have received. So the two options is the actual costs as the first option, or the, in no particular order, or the deemed costs. So the taxpayer will weigh these two options, will look at the rate per kilometer offered in the two options and look at which one of the two offers them the greatest taxable benefit. Right. If we were to look at the weighing, obviously the rate per kilometer, or the deduction that is higher, is the one that will give the taxpayer the bigger tax benefit. Right. Now remember, according to our example, the taxpayer has kept a record of their expenditure. Right, so if we look at the first option being the actual cost per kilometer, we will have to take into consideration the running costs. We will have to take into consideration wear and tear, which is one of the costs that most students forget about when they are told that, or when they have to look at this option for calculating the cost per kilometer, right? The wear and tear must be taken into consideration, as well as the running costs for in terms of this example, and the finance charges. Right. So if we look at how we will look at, or the variables involved in this example, it would be wear and tear. That would be in terms of the cost of the vehicle, the 359,584 divided by 7 years. This is standard. So wear and tear allowance for purposes of calculating the deduction for travel allowance is a write-off, or allows for a write-off period of 7 years. The 5-year period with regards to wear and tear is therefore not applicable for these purposes. I will repeat this. So the wear and tear that the taxpayer can use in their calculation of determining the actual costs involved is 7 years. The 5-year period is not applicable in this regard. Remember, the 5-year period is in terms of section 11E. It's not applicable for purposes of the travel allowance. So for this purpose, or in terms of section 8, we will refer to the 7 years. So it's that 359,584 divided by 7 years, and then we'll get to an amount of 51,369. Right. One thing to take note of is that if the vehicle was not used for the entire year of assessment, then the wear and tear will be apportioned accordingly. The finance charges, we were given that amount of 12,413, as well as the running costs, for us to get to an amount of 80,806 as the total cost. So for us to get to the cost per kilometer based on actual costs, we take the 80,806 and we will divide that by 21,000 kilometers to get to the cost per kilometer using actual costs of 3 Rand and 84 or 85 cents per kilometer. As I have mentioned when we started, the second option in determining the cost per kilometer is the deemed cost per kilometer, right? And that is based on the deemed cost scale that is updated on an annual basis by the Minister of Finance, right? So if we look at the cost scale and we try and see where the taxpayer's vehicle falls, or which category does the taxpayer's vehicle fall in, we will see that it is within that 285 and the 380,000, based on the value of 359,584. Right. So we will then look at 3 costs that will make up the cost per kilometer using the deemed cost scale. So we'll look at the fixed cost, the fuel cost, as well as the maintenance cost. So if we quick recap, it will look at 3 costs to make up the cost per kilometer using deemed costs, the fixed cost, the fuel cost, as well as the maintenance cost. If we look at the vehicle that we are working with in our example, we will be looking at this cost, the 94,000 in this category, the 94,871. For fuel purposes, we will take the 135.8 cents, and then for purposes of maintenance, we will look at the 58.1 cents. Okay. So we have then, if we look at how the cost will be made up, remember we said it's the fixed cost, fuel, as well as maintenance. If we look at the fixed cost according to that table, let me quickly put it on the video for you to look at. It's that 94,871, right? If we look at that amount, we divide it. Remember, it's the fixed cost, so we'll need to divide it by the total kilometers traveled for the year of assessment, which is the 21,000 kilometers. Where do we get this amount? So if we quickly look at our information provided, we were told that the taxpayer had traveled an amount of 21,000 kilometers during the year of assessment. Right, so the fuel cost, remember, we got that from the cost scale, which it's just converted here from cents to rands. So we add everything up, we get to an amount of 6 rand and 66 cents. So that is the cost per kilometer using the deemed cost scale. If we compare that to the actual, or the cost per kilometer using actual costs, that is that 3 rand and 85 cents, we see that cost per kilometer using deemed costs then is the higher rate per kilometer. So this is the rate that will give the taxpayer the biggest tax benefit, because it means they will get a bigger deduction and therefore they will include less in taxable income. So if we look then at how we are going to use this in our calculation to get to the net amount that should be included in taxable income, it will be the 82,000 relating to the travel allowance that was received, less the cost of business travel, and we have determined that that was the 6 rand, the cost per kilometer, using the deemed cost scale, which is that 6 rand 66 cents times the business kilometers traveled of 6,000. Then you get to an amount of 39,972, and therefore as a final figure, the amount that should be included in gross income, the net amount is the 42,028 rand. That brings me to the end of this video. I hope it was useful. Thank you.